Hey, what's up? It's Wes from Mortgage Teacher, and in this video, I'm going to tell you exactly what it means to first-time homebuyers or anyone buying a home that does not have 20% down, how you've now just been affected by CMHC's guideline policy changes, okay? Here's the breakdown. Who the hell is CMHC first and foremost? CMHC is a default insurer. And what that means is when you have less than 20% down, banks don't want to give you a dime because they feel without 20% down, it's too much of a high risk. So in order to mitigate that risk, they get insurance. CMHC, Canadian Mortgage and Housing Corporation, is a government agency, and they become the insurance company for the bank. You pay, of course, but their money is now insured. So if you default or they sell your house or you destroy the house and they lose money, the insurance company is going to save the day and the bank won't lose any money. Surprise, surprise. Well, for banks to approve you, you must also be approved by CMHC. So you're getting 2 approvals every time you submit for a mortgage application with less than 20% down. So here's how it works. When you used to have an approval, you used to be able to get insurance from CMHC with a 600 credit score, which is mediocre to poor credit. They would insure that mortgage still. Now they've changed from 600 to 680, which is an absolutely drastic jump. 680 is good credit. Most first-time home buyers are younger, and most of them have not been taught credit until it's too late. And unfortunately, it's going to affect a lot of young buyers to be able to get in the market. They may even have the down payment. They may have a great job, but now their credit's a little bit lower. Can't get in. Sorry, too bad, so sad. The other thing that they're doing is changing the gross debt service ratio from 39% to 35%. Who cares? What does that mean to anybody who doesn't live and breathe mortgages? It means nothing. So I'm going to break it down to you. What that means, it's about a 12% reduction in what you're going to be able to afford. For example, if you had a $10,000 a month monthly income and your mortgage payment, taxes and heat came to $3,900 a month, that's 39% of your monthly income is being used to service this mortgage. That's 39%. They brought that down to 35, which means that's a $400 difference per month in this example, which is $50, $60, $80, $100 worth of mortgage money. That's a big drop. So 12% is the magic number. So if you could have bought for something for a mortgage for $525, you can now go $470. That's purchase price, excuse me. So that's a big jump. And so to me, it stinks. I think it's ridiculous that now you're making it hard for first-time home buyers. You're making it hard for anybody who doesn't have 20% down. And by the way, with house prices at $500,000, kind of average $400,000, that's $80 to $100K you have to have down. So if you don't have $80 or $100K laying around, good luck. Good luck getting into the housing market because of CMHC. Now, there are 2 other insurers. So the banks can opt to use CG or Genworth as their insurer. Problem is, when CMHC moves policy and changes policy, Big Brother moves, Little Brother comes right behind. So they're about to, I'm sure they're going to change their policies to match as well. These take effect July 1st. So if you're looking to buy before July 1st, looking to get a mortgage before July 1st, you should really reach out soon because after that, who knows how it's going to go down. Now, maybe that brings house prices down and evens it out. I don't think so. I think the whole thing stinks. You're making this change after all the plethora of changes you've made in the last 2 years. You're making another change during COVID. You're making another change during World War Z in the States. Like that's worse than this COVID curl beard combo. Surprising, but yeah, it's worse than that. But I'm telling you, if you are a first-time home buyer, I empathize and sympathize with you because it's going to be really hard. So anyways, I hope that helps you understand what those changes were. And if you have questions, reach out. We'd love to hear from you. Hit us up on Facebook or Instagram, and we will talk to you guys real soon.